بسم الله الرحمن الرحيم والصلاة والسلام على رسوله الكريم نبينا محمد وعلى آله وصحبه أجمعين. Excellencies, distinguished panelists, speakers, ladies and gentlemen, thank you everyone for joining us here for the first side event of the day, labeled Sukuk, the Next Frontier. Without further ado, because of the protocol procedures that we were impacted with, my name is Mahsen Sharif from the Treasury Department of the Islamic Development Bank, and it is my pleasure to welcome Dr. Abdul Rabih Abdous to deliver the opening remarks of the side event to kick us off. Dr. Abdul Rabih Abdous.
Thank you very much. Bismillah ar-Rahman ar-Rahim. Your Excellencies, distinguished panelists, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and very good morning to all of you. It is my pleasure to open the first side event of the day as we get into the thick of the discussions in a productive day ahead, inshallah. As you all know, sustainable development cannot be achieved without sustainable finance. And the track record of Sukuk has proven that there are, in essence, sustainable finance instruments, as the negative screening eliminates any financing that can harm the people and the planet. Sukuk, therefore, serve as the primary instrument for ISDB and many other institutions, as well as sovereigns, to mobilize resources for sustainable development. In the same vein, labeled Sukuk offer bespoke themes that investors of all types and mandates can tap into. With that background, I'm very pleased to welcome the high-level dignitaries who will be sharing their thoughts and insights with us here today. I want to thank all for gracing us with your participation and making the time for this very important topic despite your very heavy schedule. I hope all our member countries, stakeholders, will take the maximum benefit of your thoughts and insights, inshallah. Thank you once again. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Abdous. We will definitely, inshallah, discuss and throw some light on the complementarity of Sukuk as a sustainable finance instrument and how labeled Sukuk can promote that further. We now have the keynote address by none other than His Excellency Adnan Zahid, the Deputy Governor of Bank Negara, Malaysia.
Bismillah ar-Rahman ar-Rahim. Excellencies, policymakers, industry leaders, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and good afternoon. It's a great honor to be here today to discuss a topic that sits at the intersection of Islamic finance, sustainability, and economic transformation, labeled Sukuk, the Next Frontier. So let me begin with a simple reflection on the Sukuk market. For much of the past 2 decades, Sukuk has been a story of remarkable growth. So for much of the past, for what began as a niche segment of Islamic finance has evolved into what is now a globally recognized asset class, liquidity instrument, and long-term financing tool for economies around the world. The global Sukuk market now exceeds $1 trillion in outstanding value, having expanded nearly 5-fold from a decade ago and expected to expand to 1.8 trillion by 2030. I should also echo the call for action by His Excellency Dr. Mohammed Al-Jasir, the ISDB President, during the 2024 annual meeting in Riyadh, that addressing today's infrastructure needs requires a fundamental shift in how we mobilize capital. So public financing alone is no longer sufficient, particularly against an estimated 15 trillion US dollars global infrastructure financing gap by 2040. So against this backdrop, Dr. Al-Jasir emphasized that Islamic finance instruments offer strong alignment with the requirements of long-term infrastructure investment and provides a compelling foundation for more sustainable and resilient growth. Islamic finance instruments, particularly Sukuk, has played a pivotal role in supporting the development of micro-critical infrastructures across jurisdictions. Sukuk are behind economic enablers such as renewable energy facilities, supply chain logistics, digital connectivity networks, as well as transportation systems like mass transit rail systems and airports. In Malaysia, Sukuk funded more than 34 billion US dollars of the nation's investment in real economic sectors in 2025. Notably, the global growth of Sukuk market also saw a rise in sustainable and ESG-linked Sukuk, with labeled Sukuk issuance outstanding estimated to be around 70 billion US dollars as the end of 2025, indicating increasing deployment of capital towards environmentally and socially beneficial projects. While labeled Sukuk now accounts for around 6% of the global Sukuk market, its penetration is broadly comparable to the sustainable bond segment, which represents about 5% of the global bond market. However, the difference in scale remains quite stark, with the sustainable bond market nearly reaching 7 trillion US dollars globally, so underscoring the significant potential for further growth of labeled Sukuk. So as we look ahead, two fundamental questions confront us. So how can the labeled Sukuk market scale similar heights? And what could also unlock its full potential for a more inclusive and sustainable economic transition? So the cause is very clear. Across many developing economies, the challenge is no longer a single transition, but multiple transitions occurring simultaneously, such as addressing climate vulnerabilities, closing infrastructure gaps, strengthening food and energy security, creating quality jobs, and uplifting underserved communities. Meeting these needs requires significant investment. Climate transition alone demands more than $2 trillion a year until 2030, while the broader financing gap to achieve the sustainable development goals exceed 4 trillion each year. So this is where labeled Sukuk can make a defining difference. By aligning the principles of Islamic finance with sustainability objectives, it offers not only a financing solution, but a values-driven pathway, one that promotes risk-sharing, social inclusion, and real economic impact. Ladies and gentlemen, to mobilize impact capital at scale, we must first establish a strong and credible foundation, one that is anchored in clear regulatory direction, robust governance, and market certainty. Trust is the currency of any capital market. Similarly, for labeled Sukuk, the trust is built through consistent standards, strong Sharia governance, transparent disclosures, and deep, well-functioning markets. Without these foundations, capital becomes hesitant, but with them, capital can become catalytic. Today, we are seeing encouraging progress. Regulatory frameworks are becoming more robust, sustainability taxonomy is more refined, and disclosure practices increasingly transparent. So together, these developments are helping to build greater confidence among both issuers and investors, yet there is still more to be done. So perhaps I can share a bit of Malaysia's experience. So our Sukuk market had a very modest beginning in 1983 with small issuances by the government to facilitate short-term liquidity management and investment for the newly created Islamic financial institutions. While this development continued, the first corporate Sukuk was issued in 1990. The market expanded steadily before a more rapid period of growth, reaching a compound annual growth rate of 9% over the past decade to stand at $356 billion in outstanding value. This represents 63% of Malaysia's domestic debt securities market. Malaysia today is one of the largest Sukuk market globally. This growth did not emerge in isolation. It was built on a highly integrated financial ecosystem where the government, the Islamic banking sector, and capital market worked in tandem to mobilize and intermediate capital. Sovereign Sukuk establishes benchmark yields, anchoring pricing and deepening liquidity. Islamic banks, forming now 48% of Malaysia's banking sector, serve as key arrangers, market makers, and investors. Corporates, which account for 57% of outstanding Sukuk, leverage the market to fund productive business expansion while broadening the supply of investable assets. On the other side, the investor base continued to expand, underpinned by rising incomes, increased savings, growing interest from both domestic and foreign institutional investors, such that issuances regularly play catch-up to the demand for Sukuk. One important step to mention was in 2014, Malaysia introduced the Sustainable and Responsible Investment Sukuk Framework, becoming one of the first jurisdictions to establish a dedicated framework for sustainable Sukuk issuance. This provided a clear pathway for capital to be channeled towards projects generating measurable environmental and social impact while upholding strong governance and transparency standards. Since then, the framework has supported more than 50 SRI Sukuk issuances, with corporate SRI Sukuk totaling nearly $13 billion, including the world's first green SRI Sukuk in 2017. This foundation has been further reinforced by the introduction of the ASEAN Green Social Sustainability and Sustainability-linked bond standards, as well as broader initiatives such as the Climate Change Principles-Based Taxonomy and SRI Taxonomy. Collectively, these have enhanced confidence or trust in the labeled Sukuk space in Malaysia and the region. Such trust is not just a market outcome, it is also a market enabler. So when confidence deepens, participation broadens, and when participation broadens, markets gains the depth and liquidity required to mobilize capital at scale. So this brings me to my second message. While regulatory certainty provides an important foundation, we must acknowledge that frameworks alone are not enough. A thriving Sukuk market depends on a robust ecosystem with credible institutional intermediaries and an active investor base that supports liquidity and efficient capital allocation. Encouragingly, the labeled Sukuk segment is gaining traction. So global labeled Sukuk issuance surpassed $20 billion in 2025, growing 38% from the previous year. However, it still accounts for less than 10% of total Sukuk issuance. This signals strong momentum, but also significant untapped potential. So as we look ahead, the challenge is not one of ambition, but of execution. We have established the foundations and demonstrated the value proposition of labeled Sukuk. The priority now is to create the conditions for the market to grow in scale, depth, and impact. So in this regard, three priorities stand out. First, the need to build critical mass. Second, closer coordination across stakeholders is essential to unlock key enablers. So this includes developing a stronger pipeline of green and sustainable assets, enhancing carbon market infrastructure, improving disclosure and reporting practices, and also introducing even targeted incentives to support the transition to a greener economy. And third, we need to continuously broaden the investor and issuer base. This involves encouraging greater participation from institutional investors while fostering stronger partnerships with multilateral development banks and other like-minded institutions that share common sustainability goals. So Malaysia has recently allowed for the issuance of ringgit-denominated Sukuk by multilateral development banks and qualified non-resident development financial institutions, thereby widening access and enabling expanded support for financing in climate, energy transition, and social impact initiatives. Nonetheless, building a market is just part of the journey and not the end. So this brings me to my last message, whereby to move forward, we must continue to innovate. So innovation must be purposeful, market-driven and grounded in real economic needs. So the needs of the next decade will look different from the last. As we navigate this transition, the transition ahead, Sukuk must continue to evolve and innovate, not merely as a financing tool, but as a platform capable of mobilizing capital towards solutions that matter. So allow me just to share another experience that offers what this can look like in practice. Ihsan Sukuk, issued by the Malaysian Sovereign Wealth Fund, Khazanah Nasional Berhad, in 2015, was among the first social impact Sukuk globally. So its distinguishing feature was the link between financial returns and the achievement of specific educational outcomes. The initiative benefited more than 5,000 students across 20 schools and demonstrating how capital markets can also be mobilized to deliver measurable social impact. Building on such experiences, we are now witnessing a new generation of labeled Sukuk: sustainability-linked Sukuk, transition Sukuk, blue Sukuk, social Sukuk, and blended finance structures are expanding the role Sukuks can play. So increasingly, these instruments are being used to support decarbonization efforts, energy transition, and other sectors critical to long-term economic resilience. This shift from financing activities to financing outcomes is already evident in Malaysia. In 2021, a Malaysian energy infrastructure conglomerate issued the first sustainability-linked Sukuk, valued at about $250 million. The issuance was accompanied with clear commitments to expand the company's renewable energy generation and reduce carbon emission intensity, reinforcing its commitment towards carbon neutrality by 2030 and net zero by 2050. So the issuance was upsized due to overwhelming subscription, reflecting market confidence as well as demand from investors. Now, as the markets continue to innovate and expand, maintaining credibility becomes increasingly important. We must acknowledge that innovation must be accompanied by stronger measurement and transparency, as investors are no longer focused solely on the label, but also on the outcome. In Malaysia, efforts are already underway to develop impact investment guidance and strengthen disclosure practices. These measures aim to improve the measurement, reporting, and comparability of environmental and social outcomes, enabling more informed investment decisions. Ladies and gentlemen, our ambition should be greater than building just a larger market. It should be also to build a market that matters, a market where innovation serves a purpose, where capital is directed towards genuine development outcomes, and where financial returns are accompanied by measurable impact. So this aspiration is also reflected under the Malaysia Capital Market Master Plan 2026 to 2030, which calls on Malaysia to recalibrate our markets for a future that is more vibrant, inclusive, sustainable, and regionally connected. As part of this vision, the aim is to scale the total market size by between $1.4 trillion to $1.5 trillion by 2030, by optimizing the value of key instruments, including Sukuk. Now, with a vision such as this, we also need and indeed welcome further international participation in our market. So this is also aligned with Malaysia's broader mission to strengthen its position as a global gateway towards impactful development regionally and globally. At the heart of this vision is a belief that capital must do more than generate returns. It must advance meaningful outcomes. I will conclude now with just two calls to action. One, we must move from mobilization to transformation. Our goal is not just to raise more capital, but to channel it into the right spaces and well-grounded purposes. And two, we must build this market together. Regulators, multilateral development institutions, investors, and industry players across countries must work together to harmonize standards, deepen cross-border flows, and develop credible, investable projects pipeline. Thank you thank you for your attention, and I would also like to thank ISDB Islamic Development Bank for kindly inviting me to speak. I wish you all the best. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Excellency. Beautifully connecting the catalyst role of Sukuk with sustainable development and impact-oriented financing. Conscious of the time, the governors have to leave for the plenary session. Without further ado, if we can move to the fireside chat number 1, I invite Ms. Paula Naufal, a senior business reporter from CNN Arabic, to the podium, and the panelists, His Excellency Dr. Ahmed Rostam, the Minister of Planning and Economic Development of the Arab Republic of Egypt, and His Excellency Osman Çelik, the Deputy Minister at the Ministry of Treasury and Finance, Republic of Turkey. Paula, over to you.
My mic it's on now. Good afternoon. So due to the time constraint we have, I'm just going to kick off right away. Your Excellency, Dr. Ahmad, so Egypt entered the sovereign Sukuk market in 2023, which was relatively not long ago. But your inaugural issuance was oversubscribed. Can you walk us through that journey?
Well, thank you so much. A pleasure to be here, and thank you for inviting me. I'll try to rush through too many ideas at the same time, but rightfully so. I think from where we sit right now, the idea of labeled Sukuk, if we just take a quick step backward, and as I share Egypt's journey through the labeled Sukuk, and actually it was a successful one. I think from a perspective of a practitioner, the idea of the labeled Sukuk is embedded in the DNA of Islamic finance. You have this mix between the environmental and social governance and the socially responsible investments. The concepts of both, or the principles governing both concepts, are really embedded and inherent in the Islamic finance broadly, and particularly the Sukuk instrument in particular. And that's why approaching the markets with this labeled Sukuk products usually becomes quite a significantly successful one. The reason I'm saying this is one, and I think we shared some perspectives about this yesterday, the nature and the structure of the Sukuk instruments, especially in times of uncertainty, being asset-based, having a more visibility to investors about what secures their investments in these instruments, make it more amenable, especially in times of recessions. And that's why more so the global Sukuk market has been growing in the current year, despite the overall global economic shocks and the challenges and uncertainty that's affecting the global economy. Coming to Egypt's own experience, yes, you're right. I think out of an ambitious 5 billion international sovereign Sukuk program, we issued a 1.5 billion 3-year Sukuk that was oversubscribed by around four times. And its cost was almost 70 basis points lower than our conventional instruments. For us, it was a big success story, and it was quite significant for us to tap that market and build on that for future consideration. We did not stop at the international level. We're also looking into a domestic Sukuk issuance program, because also domestically there is huge demand for this, and that has encouraged the private sector to mobilize financing through corporate Sukuk as well. So that journey has been driven, one, by mainstreaming the Sukuk instrument and the Islamic financing into our financial system, two, the standardization effort that we've done on building our internal regulatory framework when it comes to Sharia compliant or Islamic financial products, and then three, having clear visibility and clear vision to investors about what we plan to do in the future, so that they have, or I don't want to say perfect foresight, but near perfect foresight about the government's intention and with regards to this instrument. But then lastly, I think our macro framework also was quite encouraging, and the economic performance, we achieved a 5.1 growth for 3 quarters of the current fiscal year. I think that was also quite encouraging for investors to tap our market, tap our instruments, and it was a good success story, particularly the international issuance for us.
But from the investor's side, I wanted to ask you, was it more of interest from, let's say, Gulf funds, or
Yes.
was it more, perhaps let's call it, people wanted to diversify their instruments? Where did you see it more?
Well, I see it a mix of both, but it was mainly, there was a huge demand from the GCC countries for this issuance, but also what I don't want to say surprise, but was also quite pleasing for us is that as a source of diversification, we saw several debt funds that are based in Europe interested to subscribe in that instrument, in that issuance. That also was quite a significant, encouraging signal for us to consider this in the future.
So, as you said, non-Muslim countries are increasingly using Sukuk, and you've seen that
true.
the case in Egypt.
That's quite true, yes.
Your Excellency Osman, I wanted to ask you, so Fitch says that Turkish Sukuk issuance grew by more than 50% in 2025, outpacing conventional bond issuance growth. What's driving this acceleration in Turkey? I think just try.
Thank you very much, and assalamu alaikum wa rahmatullahi wa barakatuh. First of all, it's a great pleasure for me to join this meeting, and I thanks to the IDB to organize this panel. And when we look at it, Turkey, in fact, entered this market, international Sukuk market, in 2012, and which is a first sovereign Sukuk issues. And since then, Sukuk become a regular part of our external financing strategy. And over the years, we have completed 12 international sovereign Sukuk issues and raised more than $23 billion from the global investors. And one of our main objective has always been the investor diversification. And Sukuk has helped us to reach investors in the Gulf region and Asia who may not normally participate in conventional bond issues. And this has been broadened our investors base and strengthened our across the international capital markets. And at the same time, we continue to use the conventional bonds as well. We see Sukuk and the conventional instrument as a complementary tools that help us maintain the diversified sources of financing. In fact, another positive development is the growth of the Turkey's wider Sukuk market. Today, Sukuk is no longer limited to sovereign issues. Also, the participation banks, it means the Islamic banks in Turkey are called as the participation banks, and the participation bank and the corporates, and also some state-owned institutions have also successfully accessed the market with Sukuk issues, and they're reaching nearly $5 billion of Sukuk issues in that area. And this shows that the Sukuk ecosystem in Turkey has become deeper and more mature. And we have also made an important progress in sustainable finance. And in 2021, we introduced our sustainable finance framework. And this framework also allows the issuance of the green, social, and sustainable financing instrument in line with the international standards. And building on this work, we successfully issued our first sovereign green bonds in 2023, amounting to $2.5 billion. And looking ahead, we will continue to use the Sukuk as an important financing instrument. And we believe it will remain a valuable tool for investor diversification, capital market development, and long-term financing.
Thank you, Dr. Ahmad. So in Egypt, you were early movers when it came to green bonds. But when we speak about specific labeled sukuks, whether social, sustainable, green, it's still not there yet. Where do you see the opportunities in Egypt, and do we see it growing, and by how much?
Well, let's talk about what recipe needs to exist for this for the label Sukuk to strive. right? Or for that particular asset class to strive. One element has to do with having a strong sustainable development framework. And that check mark we've checked for Egypt, right? Egypt has a Vision 2030 that basically puts the sustainable development as a core principle for our economic plan until 2030. And we're monitoring this. We're not only embedding it as a slogan, but we're monitoring it and we're pushing that agenda forward. Now, whether this has, and in addition to this, also we have a clear, as I mentioned, a clear regulatory framework, and we have a good success track record for Sukuk issuance and Sukuk markets. As I mentioned, internationally and locally, and also on the sovereign side, but also on the private sector side with the corporate Sukuk. Now, so if you marrying these two together, basically put us on the right track to take off when it comes to labeled Sukuk. Now, have we achieved it yet? It's not there yet, but we're halfway, because we also in 2020, we issued our first or debut for a sustainability-linked bond. That was for $750 million. It was oversubscribed 5 times. We've got demands for $3.7 billion for that asset class alone, right? And also it had a favorable pricing given the interest of ESG investors and whatnot. So we took that as a signal that we need to carry and move ahead in that route and continue that in that direction. Having said this, for the labeled Sukuk to strive, we, in addition to the 2 elements that I told you, but to take this to action, you have to prepare a credible pipeline of assets that will back the Sukuk issuances and set the stage for the labeled Sukuk market to take off, or the labeled Sukuk instrument to take off. And we have a number of them, I just don't want to forget them. We have, in renewable energy, we have the Bimban project, which is quite known and quite tempting to investors. We have several potential, potentially, I would say, assets of interest in the Suez economic zone that can comply with the labeled Sukuk framework. In terms of sustainable transport, we have the Cairo Metro expansion. We have also the new electric rail, and there are several discussions with the Islamic Development Bank group on this perspective. In water management, we have also some interesting assets that we can set forward for this type of instruments, particularly water efficiency project, in addition to some climate adaptation asset classes or potential assets to back labeled Sukuk, including resilient infrastructure and sustainable agriculture. So what we're currently focusing on is beyond creating this enabling framework or setting the playing field for the labeled Sukuk to take off, is preparing the asset classes and then pushing forward the markets to start accepting this type of instruments and to encourage it further.
Are you seeing appetite?
No, I mean, as I told you, that if the international Sukuk issuance, the debut that we had, was subscribed 3 times, if you add to it an ESG perspective, we expect that there will be demand for this. What we're doing now is that we're preparing our house internally to get the asset class that would push the labeled Sukuk agenda to take us to the next level from the conventional Sukuk to actually labeled Sukuk with an actual ESG tag that can attract more interest from more investors and diversify our investors base, in addition to our instruments too.
Any expectation on timeline?
You'll hear soon. We're working on this, but hopefully we'll surprise the markets fairly soon.
Thank you, Your Excellency Atman. I wanted to finalize and ask you, where do you see the biggest opportunities for specifically labeled Sukuk in Turkey?
Yes. In fact, I believe that Turkey is well positioned to benefit from the growth of the labeled Sukuk market. And first, we already have the necessary policy framework in place, and our sustainable finance framework is aligned with the international market standards and provides the flexibility for future green, social, and sustainable issues, including the Sukuk. And the second, Turkey has a strong pipeline of projects that can support the labeled Sukuk transactions. This includes the renewable energy, energy efficiency, sustainable transport, water management, affordable housing, healthcare, and education projects. And the most importantly, label Sukuk brings together two growing investor groups, Islamic finance issues and the ECG investors. And this creates new opportunities for issuers while supporting the sustainable development goals. For countries like Turkey, label Sukuk can help mobilize the financing for sustainable development while broadening the investor base. And of course, any future issues will depend on the market conditions and the investor demand. And however, we believe that Turkey has both international framework and the project pipeline needed to participate in this market when the right opportunity arises.
Thank you so much. I know the time is tight, so I want to thank you both so much for your time today.
Thank you.
Thank you, Excellencies, for sharing the experience of the member countries. Wonderful examples of realigning strategies, creating the asset pipeline, and then driving the proceeds to make that impact on the ground. We now move to the second fireside chat, which is bringing the market evolution and latest trends from the Sustainable Sukuk segment. It is my pleasure to welcome the moderator, Mr. Victor Murad, who is the co-head of CEMEA Debt Financing at Citibank, and the high-level panelists for this session, Dr. Hanan Al-Balkhi, the Regional Director of Eastern and Mediterranean Region at the World Health Organization, and Mr. Abrar Hussain, the Head of Debt Capital Markets at Mizuho International. Please join me in welcoming the panelists and the moderator to the stage. And Victor, just to cut the work out for you, if we can have a sense check in the hall, how many of the delegates are already familiar with the Sukuk instrument? How many of them are familiar with sustainable finance frameworks? Mr. Abrar, your work is cut out for you now. Over to you, Mr. Victor.
Great, thank you. Thank you, Masen, and hi, everyone. Good morning. We'll leave some time for Q&A at the end, so please, if you have questions, do prepare them as we go through. Abrar, maybe I'll start with you. I think we're focused on Sukuk. We're focused on labeled Sukuk as well. Can you tell the audience what are the main stakeholders involved in structuring a Sukuk and moving it to a labeled one as well?
Yeah, thank you very much. So look, just as a quick introduction, I'm Abrar Hussain. I work for Mizuho. I've been with Mizuho for about 5 years. Been covering capital markets in the region for about 15 years. And I think in addressing this question, obviously I saw a lot of hands raised, but I saw a lot of hands not raised as well. So I've got to keep it at a moderate level. But essentially, if we look at sovereigns as an example, I mean, the first thing that you really need to do is the sovereign needs to have some of the framework which allows the issuance of Sukuk. So for example, when you look at Sukuk themselves, there is a beneficiary transfer of ownership. And a lot of the legal frameworks we have in some of the countries does not permit that to happen. And so some of these adjustments need to be made. Number two is on the tax side. Whenever you transfer a beneficiary ownership of an asset, there is a tax element, a double taxation element, other tax elements, and so that's something else that needs to be done. And the third thing, sometimes the law doesn't permit Sukuk. A lot of the countries that I've spoken to in the past had like bonds and loans covered, but not Sukuk, so the law had to be amended to take that into account. So that's the first step you would take. And that you need to obviously get in touch with all the different parties that can help facilitate that acceptability of Sukuk. That's the first thing. Then the second thing is the label of that Sukuk. Now the question on the label is really, what are you trying to achieve ultimately? I mean, often what you tend to find is the reason given for having a label Sukuk could be, for example, pricing. Is there a pricing benefit? Does it give you better cost of financing? And obviously the earlier panel talked about 70 basis point saving. In the dollar space, we did see that in the past. We're not seeing it right now. Number two is, what sort of signal does this send within the different ministries? How do you get all the different ministries aligned to what you're trying to achieve? How does this benefit the economy? How does this send a signal to the market of your intent and what it's not just one transaction you're trying to do, you're trying to actually build something around it. And so all these elements are quite important. And then maybe the final element is to do with diversification of investors. A lot of issuers have issued in the normal Sukuk market, we work on these transactions. Victor's obviously at Citi doing a similar thing to me. And when we go through some of these order books, we see the same names again and again and again. And so ultimately what you try to do when you do a label Sukuk, you try to find some diversification of investors. And in the earlier panel, there was a sort of a comment made on some of the European investors that are buying this. So look, there's a lot of elements that get into why you're trying to do a label Sukuk. And you need a lot of the buy-in from everybody. My experience is when we do it with governments, you really need to get all the ministries aligned. So Ministry of Environment, Ministry of Statistics, you need the Ministry of Education, of Transportation. And often what you tend to find is there's obviously little barriers between ministries in terms of sharing information. There's obviously politics that goes on, which you have to circumvent. But ultimately what you're trying to do is make sure that the information flow between these ministries is very good. And you can get the data that you need in order to, for example, do a use of proceeds. Sukuk, where is those proceeds going to be used? Who can provide that data? Who's collecting that data? How reliable is that data? How educated are the people in the various ministries? Once you've got all that, the next step is really in terms of what sort of Sukuk, what sort of label you're trying to apply for Sukuk. Now, if I look within like the Middle East and Africa, often what you tend to find is most of it's either sustainable or it's green. Sustainable is actually picked up quite a lot because you can do both green and social. And obviously a lot of the elements within the developing markets are related to more social because you're trying to improve housing or you're trying to improve, the environmental, the water, all that sort of stuff, which is the thing that really you need in some of the developing economies. And so once you've decided on that label, then you go ahead and put together a framework. Now that's at the point at which you appoint an advisor, whether it's a bank or an external advisor, to help you put together that framework. And that framework will be based on certain principles. Those principles could be, for example, the ICMA principles, which can define that. And I know ISTB has been one of the authors of these ICMA Sukuk principles. And so that's the next step you do. And then the final step is maybe to really get a second party opinion provider. Now, it sounds fairly straightforward, but ultimately you need to keep evaluating. You need to do an annual check on did you fulfill the promises you made to investors. So it does require a lot of counterparties within the system and also outside the system.
Great, thanks, Abrar. We're going to go into a bit more details as we go through the panel on the labeled Sukuk. Dr. Hanan, with you now. I'll let you introduce yourself quickly as well for the audience. But in general, we've seen health financing often focus on funding gaps. What's the perspective from a WHO perspective, from a WHO angle?
Thank you. It's a real pleasure to be here. I'm yet to hear the word health enough. That's the first observation. And I think it would have been great even how many of you are aware of the health gaps and its relation to this specific topic. Can you raise your hands? Very few. Okay, so maybe it was good that I was invited to this platform. So I'm the regional director of WHO's Eastern Mediterranean region, which is 22 countries, 750 million people, largest numbers of conflicts and displaced populations and migrant population, fragility, conflict, and emerging and protracted conflicts, if you will, conflicts. The issue here that we're trying to solve within the WHO perspective is the health agenda does not get enough attention. And despite talking about economies and dealing with the environment, all of this is ultimately for the human being. Yet the human being's health is actually not prioritized, nor is it spoken enough. And maybe we are to be blamed a little bit or a lot on not being part of these discussions. But I think it is really timely. It's extremely important that we start talking about health and how to figure out the methodologies to work with the ministries of health and other ministry lines. In previous speakers, when they talk about also maybe Your Excellency yourself, the communication between the ministry lines, the health minister is also not fully engaged in these discussions. I've noticed also that as the health personnel or whoever's presenting health, usually ministries of finance run away from us. Why? Because it's very demanding. And that's why these types of platforms are very important, because we need to articulate better why is it important to invest in health, why is it important to invest in the World Health Organization, and what is the actual benefit and return on investment when it comes to the environment, the people, the development. If we talk about the public health agendas that are really on top of our priorities, and for me as a regional director, I had 3 major priorities: access, health workforce, and substance abuse or addiction, which is a really sensitive topic to talk about. If you look at the third one, which is also linked to mental health, and you look at the conflicts, or even social, even in Western countries, even in high-income countries, the stress and mental health is a big deal. How are we going to invest in making sure that our youngsters, that the future of our world are actually being taken care of? So the importance of us looking into it's not only because the fundings are coming down, because the conflicts are becoming more protracted and prolonged, the conflicts are becoming more in number, the devastation is becoming higher. Some of the member states and the traditional donors are refocusing their funding on issues like military support and others, or internally. It is also because we need to start thinking of ways to better create sustainable agendas for the ministries of health, and for them to be able to articulate their role in development. Because at the end of the day, that's what keeps economies. I'm someone who's dealt with outbreaks for more than 25 years. Every outbreak we have is forgotten. In the middle of the COVID pandemic, I was looking around, whether I was on the streets or people are going to forget, and they're going to be distracted, and we're going to go back to the wars, we're going to go back to the conflicts, we're going to go back to our economies, we're going to forget about health. I hope that many of you have been hearing about the pandemic treaty and what it entails when it comes to the development of health capacity on the ground to prevent and mitigate the next outbreak or pandemic. So because of the interest of economical security, it's important. So these are areas that are very important in development. So the reason why WHO wants to be more engaged in these discussions is because we want to, first of all, in my region, which is mainly would love to invest more in Islamic financing methodologies. So this is very important, it is relevant, and we can be a great partner to work with in increasing the capacity and the dialogue needed to make the sukuks for health. And I really hope that everybody talks more about health in the agenda. The green development and sustainability, all of that is mentioned. But think about yourselves. Think about health. That is one of my first pleas in the first part of this discussion.
It's a great addition, and I have to admit that. Thank you. I have to admit as well, having structured hundreds of these sukuk, health is usually at the lower end of what we discuss. Brad, maybe good to go into the trends of these labeled transactions. Obviously, we did flag that health should be higher on the agenda. How's the social, green, sustainable element, and how's the growth in each one of these formats?
Yeah, look, if you look at the CMEA region, Victor, I mean, if you look at the last 5 years, if you take all the sukuk that have been issued, most of it is obviously from the GCC, roughly 20% is labeled ESG. Now, if you look at, then you dig a little bit deeper in terms of what sort of labels they have. Most are sustainable. And sustainable gives the ability to use the proceeds for both green and social. And so it gives a bit of flexibility to borrowers who come with these. The second biggest label is green, and the third biggest label is social itself. And so this trend has been fairly static. It's not as if it's massively increased, but it's been fairly static at about 20%, which is not bad in the scheme of things if you compare it to the global bond market, and the ESG component of that bond market is actually a lot smaller. I think in terms of trends, one of the most interesting trends, and one I think we will see a lot more of, is on the transition finance, which isn't really discussed in great detail. So just to recap, in November 25, ICMA came with a new framework for a finance framework and also a bond framework for transition finance. Now, for those that are not aware, what happens when you do ESG, normal, you know, the social green and sustainability, you exclude the hard to abate sectors. So for example, if you've got a cement factory that's coming out with lots of pollution, they're excluded from raising financing to fund their business. And the thinking was that if we continue to ignore these sectors, and this is particularly relevant for the developing markets, because the developed markets are, you know, have probably passed that stage and more of service economies. But if you look at the developing markets, where factories are very important, aluminium, cement, all these things, it's very important that these are included in this journey, this pathway that we're trying to achieve. And so ICMA came with a very interesting guide as to what would qualify in transition finance frameworks. Now, what this will do, which I think particularly in the GCC, where I'm based, that I think there will be a big drive towards transition. At the moment, the biggest market globally for transition-labeled bonds is Japan. And the reason Japan is so big is because the government instituted a policy to look at the industry. So they did an industry-wide policy. So for example, let me say they went into the car sector, and they said, okay, anybody who's manufacturing cars has to reduce its CO2 emission by X%, by 30, for example. And so this became a policy within the country, and then everybody followed. And so the biggest issue is globally in transition, label Sukuk, which is the new development, is the Japanese market. And we believe strongly that within our region, which is, you know, Africa, GCC, particularly some countries in Asia, we will see this transition label coming through more frequently. At the moment, if I look at, it's very little. So far, there's only been Riyadh Bank in Saudi that's issued a transition finance framework. Now, one of the other elements to think about as well is the investors, because ultimately what we're trying to do this for, yes, there's all the environmental benefits, but ultimately you're trying to save on costs as well if you can do that. Now, from an investor's point of view, at the moment, they are all starting to look at transition-labeled bonds and later on Sukuk. But at the moment, they haven't allocated resources for that. And so there will be a stage in the future, maybe in the next year or so, where you'll have portfolios amongst fixed income investors that look at this particular label. And I think that's going to be a very exciting development. And a lot of the conversations we're having is on this. And there's a number of frameworks that are being put together, some of which we're on, in the region on this particular topic. So that's probably one of the most exciting developments.
Great. Thanks, Abrar. And Dr. Hanna, we'll go back to you. And I think for everyone here, we're going to keep pushing on the health financing. How do you see that bit grow in the Sukuk market specifically?
I think there's a huge opportunity in the Sukuk market, and in fact, the work has already started in a way because of, again, sometimes the difficulty that the WHO is facing has really pushed us to think really hard about how to access and how to think not just for supporting the WHO, but supporting the health sector within the countries itself. So what we're doing at the moment, we've launched in Riyadh last year the first discussion, a global discussion on Islamic finance by the WHO in Riyadh, and several countries from the finance and the health ministries have attended. We're having discussions with the ministries in country by country as well on what are their needs, how do they see the opportunity of using Islamic financing and specifically Sukuk. And also, by the way, just to sidetrack a little bit, it's not just about Sukuk, but it's also about financing stewardship in the countries. So there's a lot of waste, if you will, and there's a lot of lack of capacity to understand where to better invest, whether it comes to even where to build the hospital, what type of level should this hospital be, is it a primary healthcare or a secondary healthcare? So all of those thinkings become very, very important. When it comes to Sukuk, there needs to be, and we're currently in deep discussions between WHO and Islamic Development Bank and other entities on what is it exactly, how are we going to articulate this, and where is this investment going to go into, and what are the needs? And that has to also follow what the WHO calls its general program of work. We've done that initial analysis, and we've identified several critical early areas that need investment. Because of the ODA withdrawal and the drop in support, we will be seeing increasing trends of HIV, TB, and malaria. Now, these are just 3 specific diseases that have been mitigated to a great degree over the past years, but with the withdrawal of funding and with the loss of specific supporting and UN entities and non-UN entities, we might see an increase in HIV. We'll probably will. HIV, malaria is another menace when it comes to health. The virus, the parasite is becoming resistant, and the mosquito that carries it is becoming resistant. So these are true health problems. Nigeria and Sudan, for example, are some of the biggest countries in the world that are having burden of malaria that affects the functionality of the community. So number one, we're looking at the areas that are in much need. So specific diseases like HIV, TB, malaria. Again, access to medications and medical countermeasures is another critical one. Data and data analytics, which is the core of public health. And certain other areas like primary health care. So we're already looking into, because the governance of a sukuk becomes very important, and the transparency on where the funding goes, where the money goes, and what is that impact on the ground, that is one of the critical areas that needs to be discussed. Sometimes as physicians and as the healthcare, we need to support this, we need to support that. But even when I'm speaking, and I was at I was at the World Bank in spring, and the discussions with the finance people is a different way of communication. They want to see the impact immediately. We're giving you $100, how many, and again, when you look at entities, and I'm being very transparent in this discussion, when you look at Gavi, Global Fund, entities that are very focused on a certain area, they can show that much easier than what the WHO does. But the World Health Organization has a critical role in co-orchestrating and developing the architecture of health at a country level, whether it's financing, whether it's governance, and also supporting technically on other programs. So the idea is that if we want to reach our SDGs, which we have fallen behind now, and if we really want the economies to grow at scale, we have to take care of the health agenda, and we have to work together on what is needed from our side, where is the ambiguity from our side and the lack of and you have to keep pushing us to be more articulate and more clearer on how this is going to help. And we have to also, we have one of the asks, again, with every question I'll have an ask, one of the asks, we need to really cross-fertilize between the banks and the organizations. And I'm happy that we do have secondments, and we have people who work within the WHO from the World Bank, from the European Investment Bank, and from the Islamic Development. We need more of that to work side by side to reach the goal, and hopefully faster than what we're doing at the moment. So there are many areas, of course, but that discussion is ongoing right now.
Very clear. Also very interesting to admit. Abrar, you did flag the ICMA principles, you did flag the SPOs, got a lot of member countries here. How should, let's say, the working team address all these points when they're putting together a Sukuk project, a label Sukuk project?
Yeah, I mean, I covered it in the first statement, but to some degree. But I think when you're working on these projects, my experience has been that there needs to be ownership, because ultimately what happens is somebody needs to take the lead, and somebody with influence, with the ability to collect the information that's required, the ability to get that information on a timely basis. And often what you find is that it may not happen. I mean, everybody has the best intention, but sometimes it doesn't happen. Things are delayed. You don't get the right information at the right time. And often what we find is that there needs to be somebody who takes ownership. So that's probably the first point. I think the other element is really when you put together these frameworks, and you need to have a clear vision as to what you're trying to achieve. And this is similar to what I said earlier on, is what is it that you're trying to really get to? And often when we're doing labels, Sukuk, the issuer comes to us and says, okay, what are we going to save on this trade? And what's the pricing benefit? What they don't look at, and they look at the single transaction. And the reason they look at that is because their management is looking at them and saying, okay, what are you saving on this transaction? You've spent a lot of money on, second-party opinion provider. You spent a lot of time and resources of the organization. What's the benefit for us? But often what gets overlooked is the benefit that it says, the signaling impact that it has across the organization. And that's something that we don't see immediately from the transaction that you do, but you do see that a lot of the counterparts within the organization really feel strongly about this particularly the new generation, because obviously we're in a region where there's a lot of young people, and what you tend to find that signaling impact is as strong as the pricing benefit that you may achieve when putting it together.
Thanks, Abrar. We'll get to pricing and investors in a bit, but prior to that, Dr. Hanan, in terms of execution, can you share one financing innovation that the WHO is currently exploring around the health financing agenda?
I think I forgot to mention a critical area of work that is extremely crucial for us is the emergency response agenda. So that is one of the areas that we would like to maybe explore further on how can we do more of that. But I think when it comes to the Sukuk is one of the biggest ones that we're looking into at the moment. And as I said, we're trying to articulate that better with the bank on what are the areas of work that can take place. But I think the areas of work can be quite broad. So the methodology, we're talking about Sukuks, right? We're talking about specific ones for these areas. But one of the areas that is in desperate need of support and diversification of funding, because the WHO usually about 20% of its budget is through assessed contributions, and 80% is through voluntary contributions. And because of that, many of the voluntary contributions are either thematic or specific to certain areas. So that does not give us a lot of leverage to work with our member states. So looking into specific sukuks that can address the issues of emergencies and the emergency response would be one of the biggest and the first and foremost areas that we're working on.
Very clear. Brad, I'm going to combine a couple of questions together. So I don't think any TCM panel is done without a view on investors, diversification. We touched upon pricing before, so maybe we don't cover that. But also maybe we get your thoughts on where this market is heading and how far can it grow?
Yeah, with regards to investor diversification, look, ultimately what happens is when you do an ESG labeled Sukuk, what are you trying to achieve? You're trying to attract different pool of investors. So you're a borrower who's come to the Sukuk market for many years. Now you're trying to do an ESG labeled Sukuk. You want to see some diversification of investors. You want to see new investors come in. Ultimately, what you tend to find, and having looked at lots of transactions in the past, you do find quite a few new investors that do come in. So these are conventional investors that have typically not bought Sukuk before, who are now buying the Sukuk because it's labeled. And often with these investors, what we tend to find is we have a conversation on explaining what a Sukuk is. And this is really very positive, because what happens is some of these investors would never have traditionally looked at these names. All of a sudden there's a label on it, and part of their policy is to look at all labeled transactions irrespective of the structure, and this is very beneficial. And often what we tend to find is we get a handful of these investors coming in, and they're celebrated, and we should celebrate them, because I think this is the diversification play that we're trying to ultimately achieve. And so that's good. But on the other side, you see traditional sort of the normal investors that invest in Sukuk, they may put in bigger orders into those transactions because it's a labeled transaction. You may find some investors that have different portfolios. So you may have an investor that has an emerging market portfolio, puts money in from the emerging market portfolio, but it also has an ESG portfolio. So often an investor that would have typically put in, let's say, 20 or 30 million, all of a sudden in a transaction puts in 50 million order. And so you do get a degree of diversification. The only slight problem is some of these investors that have different portfolios, you may not know how much is actually coming from the ESG side and how much is coming from the normal Sukuk investment. And often what happens is we as bankers, because we don't know, we label that as an ESG sort of investment because we don't know exactly how much is coming from which portfolio. And that can be a bit misleading because often when you see these Sukuks and you celebrate the fact that, you know, there was 30% of ESG investors, that may not necessarily be fairly accurate. It's just a best guess, but often that number can be a bit smaller. But the key in all this is really to see if you can open up a new pool of liquidity, particularly in the European investors. So, for example, if I give you the analysis of investors in some of the Nordic countries, they are very focused on the ESG label market. They typically don't invest in emerging markets, they invest in West markets. But when you present something with a very strong, robust framework, particularly if it's something new, like innovative, like transition, you tend to find that there's a conversation that goes on, and often that's followed over time with an order into the order book. So I think we're not there yet in terms of the diversification that we want to see. It's moving in the right direction. It's not moving at a very fast pace, but I think that's something that we need to see going forward.
Thanks, Abrar. I agree. These investor classification numbers are usually the hardest. Maybe we need a panel on that later on. Dr. Hanan, if we were here 3 years from now, what would success look like for you in terms of health financing? I know a few more raised hands would be a good start.
You stole that one from me. Absolutely. So I think making sure that it becomes prioritized, we need to work really together on that. That's very important. As you had mentioned also, the diversification of the funders would be really, let's start and then have more and more and see how we can build this quickly. And I think also engaging and creating the knowledge and filling that knowledge gap at the country level with the ministries of health and financing. And I have to say that also when I do visit the member states and any regional director and our director general, we always have discussions in a multi-sectoral aspect. What we have also done, again, diverting a little bit, is we worked on health in all policy for the member states. And there are several countries that have moved forward with this agenda. In doing that, because 70%, by the way, of the solutions for health are in other sectors. So the ministries of finance and in managing the financial cycle, they have to understand what are the interventions that need to be put in place in the agriculture sector for antimicrobial resistance, for example, in the Ministry of Interior or Foreign Affairs for the drug addiction agenda, and so on and so forth. So we need that dialogue to continue because that is a healthy discussion that will allow for more innovative thoughts on how to use Sukuk and how to use Islamic financing in bringing more funding to help the individual. So more discussion and dialogue on health, more integration at country level, more awareness from the ministries of finance. And again, I'm a little bit skewed in my discussion sometimes because I'm leading the EMRO region. And the EMRO region is the region with the most conflict and the most displacement. So even the ministries of health have a bigger burden on them. They don't have the luxury to really think and discuss, they have an immediate need that they have, and not only serving their internally displaced population, but in Sudan, for example, I was in one of the camps and I've seen displaced people from Syria. So you have the burden of displacement into countries with already fragile health systems. So I would love to see that we have this solidarity, more discussion on the ground, clearer areas of working forward. We are a philanthropic region to start with. So we need to show the rest of the world that the region, from the region, is supporting itself with our own ideologies, with our own basics of faith, and integrating the whole spectrum of what we're doing. So that is my my hope, and I hope that we will see that the health sector has led to the increase that you are ambitious for. Because even in the guest speaker from Malaysia, they were talking how fast can we move this agenda. So you can rely on us. We can make a huge space and work for you to go really fast. We're very ambitious about this work, and we're very keen to work with you on it.
Thank you very much. Great. I think with that, I'll thank you both for the panel today. That's the end of my questions, but I'll open it up to the audience as well. In case there are questions, please, if you can give your name, your organization, and get a mic, please.
My name is Khaled Khalifa. I'm a senior advisor to the High Commissioner for Refugees for Islamic Finance. First, thank you very much for the very interesting discussion. I have a question for Mr. Abrar, actually. We established two very successful Islamic finance funds under UNHCR. One follows the Zakat principles, so the Refugee Zakat Fund, and the other one is a Waqf fund that is established with the Islamic Development Bank. Now we are experimenting with Sukuk, and we are hoping to issue our first Sukuks within the coming months, probably year, if we are ambitious. And my question is, if we put the Sukuk that we are trying to launch in the future under the label of humanitarian transformation, humanitarian transition, the current High Commissioner is hoping to drop the numbers of refugees by 50% by the year 35, and we call it 50 by 35 strategy. Do you think something like that would appeal to investors? And if you can reflect a little bit on the marketing aspect of Sukuk that are labeled humanitarian, and whether those could be purely humanitarian Sukuk ESG completely, or a blended structure would work better? Thank you.
That's an interesting question. Look, I think firstly, can it work in addressing your question? Yes, it can. Of course it can work. It's actually something that, you know, is very presentable to investors. There will be a lot of investors interested in this. The question that really comes up is, for investors, there's a few considerations. So you've got one consideration, which is the social impact of this. And you'll have an ESG guy, an analyst that will discuss this aspect in detail. But then you'll have the fund manager. And the fund manager will say, okay, if I buy this, can I sell it if I need to sell it in the secondary market? And often what happens is when you do a transaction, I don't know what size we're looking at here, but below $500 million, for example, it becomes quite difficult for them to sell. Now, the problem you have this is a broader Sukuk issue, and this probably will be prominent here as well because this is something quite unique, is that liquidity in the Sukuk market is fairly limited. So if I have 20 million of a Sukuk and I want to sell it, or if I have 20 million of a conventional, the chances of a conventional being more liquid and me being able to sell it is much higher. So then I have to ask the question, you know, if I come into this, at what price do I come in if I'm an investor? And that becomes something quite challenging because ultimately you're trying to do some fantastic work, very highly admirable, but ultimately from the fund manager's point of view, he's going to ask, if I want to sell this, there's an illiquid market, the bid offer is very wide, and I'm going to struggle to get rid of my position. Should I participate in this or not? And ultimately what determines these is a benchmark size, index eligible, so the universe of investors that can participate increases quite considerably. And so now in addressing the question about investor engagement, 100%, you need to do a lot of investor engagement. That investor engagement needs to be very targeted to those investors that have expressed interest in buying this. It can be virtual, so obviously from a cost point of view, it's a lot easier. And often what you tend to find is that there would be anchor investors that would participate in this, that would really drive the transaction. So you'd find somebody, if for example, let's say take the example of you trying to do 500 million, you'd find somebody who's willing to take on an anchor of 100 million, and the rest you can build around it. And so it is possible. It will take some time. It's not something that is widely done. I've not come across it before. But the education process will take some time, and so you need to be prepared to sort of work with investors over a long duration to get it done. But I think overall it's a fantastic idea, and it's something I think is something that the investors that we cover who buy label Sukuk would be very keen to look at.
encouragement. Thank you, Abrar. If I can share a note of encouragement with these labels, there are investors who used to never open doors or take meetings just because of the label of Sukuk as an instrument. But when the green label and social label and sustainability labels were presented to them, they not only opened those doors, but they participated as well in those issuances. So the journey is, it takes step by step, but especially framing the message of the sustainability and the indicators and results on the ground would help build the momentum towards investor participation. Please, Victor.
Yeah, I mean, to the Mohsin's point, obviously, I know Islamic Development Bank for a long, long time. And if you look at Islamic Development Bank in terms of their journey, it takes time to get investors engaged. Some investors, I'm sure the IDB team will confess that, they probably worked on for years before they finally participate in a transaction. And when they do participate, they are typically in for the long term. So it's a massive result, and it should be celebrated. Because I remember being involved in one of the Islamic Development Bank transactions, and there was an investor that the team had worked on for 2 years or 3 years, and they finally participated in the transaction. It was fantastic. So I think one of the things you need just to prepare, it will take time. But to Mohsin's point, definitely they are investors, particularly European, because Europe's the center of this label space, that are sitting in places like the Netherlands, like the Nordic countries, that will look at the label, they'll say, we've never invested in Sukuk before, but this looks interesting, and will potentially participate, but it will just take some time.
Thank you, Abrar. We need some questions for Dr. Hanan, because not many hands were raised for her. Please, go ahead.
All right. Excuse me. Good morning. My name is Zakari Ahmadu. I'm the CEO of BAS Financial Services. We are an asset management company based out of Nigeria. So in Nigeria, we've had a lot of success with Sukuk. We have sovereign Sukuks issued up to 7 series. So the 7th one was so oversubscribed that the government tried to raise $200–300 million, and they ended up raising over $1 billion. However, and this is the question now, we have not had any traction when it comes to Sukuk for health. What do you think the issues are from an outsider's perspective and from a development perspective? What are the structural challenges, data challenges, and how do we de-risk these issuances so that the robust market, there's a demand market in Nigeria, both from retail investors and from corporate investors. The second part of the question, and one of the major issues, is the liquidity and tradability in the secondary market. That is an issue that we're dealing with as asset management. But from a sovereign perspective, what do you think are the challenges, and how do you think we can push sovereigns to start raising Sukuks for health? Thank you.
So Dr. Hanan on the health part, and then Abrar on the liquidity
I think you can
part.
also answer on the challenges as well from your experience, because again, you are the experts in this. From what I am seeing is, again, we go back in any kind of engagement on health agenda, we have a very specific pool of donors and philanthropists who work with us. And they have been there for years, and the pool is not expanding enough. So I think we have, as I said, the issue with so there's health and there's WHO. I don't want to confuse the two. But again, they kind of are similar challenges. The health agenda at a country level is not seen as an economical investment. The return on investment is not well articulated, number one. Number two, it's also seen many times as a drain of funds. And that's why when we talk about prevention, and that's where ministries of health, and talking about the health dialogue, we need to talk about health disease or disease prevention, and response to health issues. So do we put funding to treat dialysis patients from diabetes? Or do we put a whole lot of funding to prevention of diabetes from happening at the first place? These are two very different questions, and the answers are very different on where do you want to go. If you talk to a group of diabetics, they'll tell you, no, I want you to help me get my medications, have my dialysis, be able to survive a bit longer. If you look at the investors, they're going to say, no, we want to put our money in something that will prevent diabetes. So this discussion sometimes becomes very difficult, and the liability of a minister of health is on not providing care to the ill. And the person who goes and complains on social media today and say, I went to the hospital, I didn't find my medication, you have a new minister of health the next day. That happens in some countries. Once a story like that happens. So I think when it comes to the investors then, they want to see a clear outcome. Sometimes the investing body, and I might be wrong on that, you can correct me, they want to see an impact that is glorious, that's going to have a headline, that has an impact that they, sometimes they want to see a building. And we, by the way, we've had that where donations come to build a hospital, but then we're left with buildings that are empty because we don't have enough running costs or the funds to run the organizations and the hospitals. So there's a lot of things that, and thank you for this question, because we need to unpack where the problems are specifically for this type of investment in sukuk or bonds or zakat or hatta al-awqaf, which is another way of, I would assume that awqaf might have better traction because then they're already philanthropic in a way, and it's more of a giving than sukuk and bonds. But I think that there's opportunities maybe for us to be, I think we have to talk more, we have to discuss more, and we have to analyze the cases more. And I'm here again as on a very steep learning curve, and maybe I would like to hear from you also, or whoever can add to that.
Yeah, so maybe I can start and Victor can add. But look, first of all, if you're trying to, let's just take a few steps back. If you've got a project, which is, say, healthcare, and you're trying to fund that healthcare project, and you want to do it in labeled format, okay, so what are the options you've got? Number one is you first of all, in terms of issuing a sukuk, the amounts may be too small for the international market. So it may not be possible to do something of 100 million or 150 million, which is quite a considerable amount, but you may not be able to do that because, again, as I said before, international investors want liquidity. So they will not participate in a transaction like this. Then you think, okay, maybe we can do it in private placement format. Again, it can be done. There may be some investors out there that will look at it. I think it's unlikely. So what tends to happen is that the governments themselves will issue a labeled sukuk. Now that labeled sukuk could be a sustainable sukuk, a social sukuk. Within the framework of that, a certain amount of those proceeds will be allocated towards the health sector. And that's normally the way it would work. Because ultimately, look, the other thing you need to think about is, yes, there's some investors that will look at this as a charity, as good work. But most investors will simply ask the question in a very ruthless way, am I going to get my money back? And who's going to pay me back? And if you say, okay, the hospital will fund you, there's private healthcare, whatever. Okay, I want to see the financials. What are the last 5 years of financials on the healthcare? It's unfortunately this is the nature of the business we're in. And so ultimately, the way in which you get around that is either the health ministry issues with a sovereign guarantee, but then you ask the question, why don't the sovereign just issue? It's far easier. And that's what we tend to find. So when the sovereign issues a labeled bond or sukuk, when you go into details of the allocation, use of proceeds, there will be a certain amount allocated to different segments of that country, of which health will be one of them. And that's the way that the money will flow. Because ultimately from investors, they are taking a risk on the sovereign, and the sovereign has the obligation to pay them back and for the duration of that transaction and pay them principal at the end of that transaction. And so that's typically the way in which you would go around it.
Perfect, please.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Salum Shabani Lupande. I come from Tanzania, and I'm a Secretary General for an institution called Center for Islamic Finance Compliance and Advice, which basically is, its mandate is to promote Islamic finance across East Africa and prominently in Tanzania. I've been involved in advising and quality assuring Sukuk issuances across corporate as well as sovereign and quasi-sovereign. Now, the experience that I've come across is that many African sovereign, and infrastructure Sukuk. Issuances inherently deliver development and sustainability outcomes. The crucial question is, what practical steps should issuers in emerging African markets take to obtain the internationally recognized sustainability labels and without materially increasing costs and complexity? What we find is that most of these issuances, they are not labeled, and if you talk to the issuers, which most of them are governments, then they tend to assume that getting labels increases costs, or it makes it more complex to the extent that it delays the implementation of the Sukuk structuring, issuance, and actually fundraising.
Thank you. If you can just pass the mic to Brother Sheriff there. Okay, please, Abrar.
Just on the previous question, apologies because I think by time we use a very broad spectrum of social. So if you look at social, you can talk about education, you can talk about health, goes up and up and up. Our view, and even from ECMA, because I chaired the ECMA on the region, our view is that this market will change by time. So there will be more label, which is more targeted. For example, health, which will cater for all the investors that really want to target health. Same, Abrar, if you look, if it started by sustainability, because when it started by sustainability, it's very wide label. Then comes, green, which is targeting more green investors, as you said, in Hague, Netherlands, Nordic, which is mainly funds that is really impact investors. They can sacrifice part of the return for the cause. Now, my view, and I don't know if this will really happen or not, that the bankers also need to have some work on doing that, because they're not doing it. And they think, oh, let's do sustainability as a white, label. But then the message is scattered, because a lot of investors would say, let me look at the use of proceeds. The use of proceeds is very big, is very open, and a lot of it, I would say investor funds wouldn't like to have this. However, if you tell them this is a health sukuk, which will go and fund some of the programs of the WHO, I am sure that there will be a lot of investors that might be interested. Just sharing my 2 cents about this.
Look, what we've always found is that it's just the quantums. Mohammed, I think ultimately what happens is, I agree with you. The reason you have such a wide array of categories is ultimately because an issuer has to raise a certain threshold of financing. And what you tend to find is that if somebody's trying to target a particular segment, let's say we do a health sukuk, there would be investors interested. There's no doubt at all there would be investors interested, because this would fit within their ESG portfolios. But ultimately, the question really is if you can commit to a certain size of transaction, and that transaction is above a certain threshold for certain investors, that way we can entice the other investors to come in, and it can be labeled. Now, it can be done. There's no doubt at all. But it's just what I found is the reason we use multiple labels is because most of the borrowers that are borrowing do not have enough quantum in a specific label. That's the ultimate issue. And if you do a 70 or 100 million trade and you want to do, a big, like a public sukuk, it's very difficult, as you know. And so you need to find some very qualified investors that are buying private placements, that are happy to hold to maturity. And from my experience, they do exist, but they're very difficult to find. And that's ultimately the problem. For me personally, having a health sukuk, if you can do $500 million or $1 billion, and it comes from, for example, Nigeria, it can be done. There's no issues at all. I think investors would be very keen to look at that. And I don't think investors are their mind is set on transportation or set on particular segments. Ultimately, for them, it fits within the ICMA framework. They're happy to accept it. So I just think it'll take a bit of time, but yeah, we will get there. Sorry, in addressing your question.
Yeah, thank you, Abrar. So we have had a very good experience from other regions to your question, where it cannot be ignored that there are costs to add the labels and undergo the additional administrative tasks to go get those labels and frameworks in place. What other countries have done and other regions have done is prepare a sort of, if we talk about the green aspect for a moment, there is a green financing facility that some countries have established at the sovereign level, and that helps corporates and other issuers build their frameworks through that facility. And they have a technical assistance aspect as a grant-making aspect as well to develop those frameworks in consultation with banks and lawyers, and then become prepared for labeled Sukuk issuances. So bringing those aspects and then the investor marketing as well. So in that shape, if a facility can be constructed, that would be able to help countries in those regions as well to make that progress on that front. We have been asked to vacate the premises, and we are bang on time with our time slot. We really appreciate all the interactions. We are very thankful to Abrar for bringing the market perspective, the latest trends, and Dr. Hanan especially for bringing that flavor of health that needs to, a lot of momentum required, but very happy to see the collaboration prospects for the future and scale this up to be the next frontier in labeled Sukuk, in addition to other labels that the discussions will continue. Thank you, Victor, for moderating this fireside chat and helping us navigate through these challenges and the experience of everyone. Thank you, everyone, for participating. Wassalamu alaikum wa rahmatullahi wa barakatuh.